was a new Smaulgld creation by Mark Battaglia, a musical composition entitled Muggsy Malone. Hello and welcome to another Smaulgld live stream. It is Monday evening, the 11th of February, 2019. Tonight's topic: China's debt problem is too large to hide. We're going to discuss some recent developments. It's really the culmination of what's been going on in China, which has largely been ignored by many in the media, about Chinese massive debt problem and the issues that it is now causing and is being exacerbated by this trade war. We're going to discuss that as the main topic tonight, but first let's take a look at the markets. Gold and silver markets today, not much to talk about. Both were down, as was the general stock market, although the equity markets were mixed, really, because the Dow Jones Industrials was down 50 points, down to 25,053, but the NASDAQ was up slightly, up 9 points to 7307, and the S&P 500 eked out a 2-point gain. Pretty much flat markets across the board. The gold price fell, however. The gold price was down about $5, $6, down less than 0.5%, though. But not a big day, probably not a lot of volume either. Same with silver, but the typical thing that happens when gold goes down, silver goes down a little bit more. So gold was down less than 0.5%, and silver was down more than 0.5%. And silver closed at 1569, and currently in the aftermarkets, they're both pretty much flat. Gold down 80 cents and silver down 1 cent. And what did that do for the unsustainable gold-silver ratio? Well, it went further higher again today, and you can see here it's at 83.41. And I hope people have finally got the message from reality over the last 10 years that there is no natural ratio unsustainable that silver has to return to. 8-to-1, 9-to-1, 16-to-1, 15-to-1. All of those are historical anachronisms. They're not going to happen again unless either both gold and silver get remonetized at a particular ratio, as you had in the past when both gold and silver were recognized on a bimetallic standard, or there is some dramatic increase in the, most likely in the industrial demand for silver, some new uses that just require so much more silver that drives silver price higher, or somehow there's a massive discovery of gold that drives the gold price down. But to think you're going to go to a 16-to-1 ratio, that ratio existed when both gold and silver were primarily used as money. They are not primarily used as money today, even though people insist they're money, period. We've been through that whole debate. Silver is an industrial metal. Gold is really a jewelry metal. Those are the primary uses for each metal. As you can see, industry and jewelry, not the same thing. There's some overlap in that historically they used to be used as money, but even on the investment side, silver's investment demand is only 10, 12, 13% of overall silver demand, whereas at least gold's demand through investment and central bank buying is about 40, 45%. So two totally different metals, totally different colors, different properties, and that's why they're not trading at that ratio, despite whatever relative rarity argument or historic argument you want to throw out there. Now let's look at the cryptos. I've been talking a lot about the ATMs. I really think that the ATMs are a very important part in the development of mainstream adoption. I don't know what that does for the price, but there are now almost 4,500 Bitcoin ATMs around the world, and almost 2,700 of them in the United States. They're almost becoming ubiquitous. Not quite yet, but they're in a lot of grocery stores, a lot of point-of-sale bodegas, package stores. And the more they're available, the more people use them. And Litecoin actually has nearly 2,900 ATMs. For the most part, every ATM, cryptocurrency ATM, carries Bitcoin, but 66% of them carry Litecoin. It is the most of any altcoin. And we also mentioned that Coinstar, which has 20,000 point-of-sale machines where you can turn your coins in and get gift cards or cash back, now also has a good portion of their machines now refurbished to also be able to sell Bitcoin. So you're really getting up there. You're going to have 10, 15, 20,000 machines when you combine them all together around the country that you can buy cryptocurrencies at. And the reason I'm mentioning this again is not just to keep mentioning it, but we are going to keep updating it. The Philippines, actually a bank in the Philippines, a regularly Union Bank of Philippines, is launching a two-way cryptocurrency. They're the 7th largest bank in the country, in the Philippines, which is a very large country in terms of population. It's launching a crypto asset automated teller machine. And that was a story in some obscure... I'm not belittling this site. I just never heard of fanexpress.in. Maybe it's a big deal. But they were reporting on some local Philippine news, but then it also got reported in CCN, which is a pretty much larger media outlet. Again, the size of the outlet has nothing to do, as you know, with the veracity of what any media outlet reports. But looks like this article too, a major Philippine bank launched crypto ATMs and it may fuel massive adoption. So they're saying the same thing that I'm saying is when you see a lot of payphones, you see a lot of ATMs, you see a lot of lotto machines, they tend to be there because they get used. And obviously if there's Bitcoin in them, people will buy Bitcoin and then they'll probably bring them back to the store from which they bought them if they're not hodlers and spend them there. And that's how you get the velocity of the currency being traded from the place where they bought them. All right, now as to crypto prices today, looks like we took a bit of a breather. Litecoin finally cooled off. I think it's down about 7-8% at the moment. Oh, it actually went up a little bit more, but it's down about 6%. Still in the 40s, but Litecoin had quite a rally. It had gone up about 40% over the course of a couple of days, which was odd because the other cryptocurrencies did not move up at the same pace. So right now, Bitcoin is flat at $3,582. Ethereum is down about 2% to $119. But Litecoin's down 5% to $42.22. And Bcash is down 2%, down to $120.17. All right, what else do we got here in the news before we get on to China? Well, we've got 2020 shaping up. Also tonight there is there's two rallies. Beto O'Rourke will be in El Paso. I believe that's where he's from. He's going to give some type of rebuttal to Donald Trump's speech at the border. He's going to be pushing for his wall. Interesting poll in Rasmussen, which, now remember, a lot of people say that you can't trust certain polls like Rasmussen because they're skewed towards Trump. Now, whether that's true or not, it at least is consistent with itself because they did show Donald Trump at a 43% approval rating during the height of the shutdown. And this particular poll, the latest one, they do a daily tracking poll. It shows him at 52%, and this is after the State of the Union address, which appeared to be widely received well amongst independents and obviously Republicans, not so much amongst Democrats. What I like about the Rasmussen poll is they break it down into not just approve or disapprove, but then they go one step further and they say strongly approve, strongly disapprove, or somewhat approve, and somewhat disapprove. And that's where you can, I think where someone stands on strongly approve or strongly disapprove is more telling than the overall ranking. So if someone can get a 50%, but they can have only 19%, for example, strongly approve, and the remainder just approve. It's the strength of the strongly approve and the strongly disapprove, I think that's the most important. And in a way, what I've looked at the data, both Trump and Obama had very similar strongly disapprove ratings during this time of the presidency. Both had in the 40s. What Obama didn't have, which is interesting, his strongly approve was never past the low 30s. Trump has a strongly approve in the 37 to 39% range. So even though they were both around the same 50-50 mark, a little below, a little above, Obama's strongly approve were never as strong as Trump's strongly approve, and Trump's strongly disapprove were slightly higher at their peak than Obama's strongly disapprove. I like that. I wish more of the polling outlets would do a strongly approve, strongly disapprove, because if you have people who are strongly disapproving you in the 40s or strongly approving you in the 40s, that's very significant than just, okay, he's all right, I approve. Okay, I don't really like him, I disapprove. I think it's the strength of the approval or disapproval is an important part of the polling, and I just wish the other polls would do. But only Rasmussen does that. All right, now what else going on here? Let's see. Well, I guess it's time for Veronica. Yes, indeed. Uh-oh. We got a moron here.
Presenting the distinguished international news commentator and foreign correspondent,
Smaulgld. This has been an extraordinary week in world affairs.
No, I told Hillary Clinton that that's moronic.
Well, tonight's Veronica focuses on another prediction by the esteemed Nobel laureate winner in economics, none other than Paul Krugman. Now, Paul Krugman, not commenting on his economic prowess, but his predictions have not been very good. In fact, he made two very high-profile bombs of predictions. One, he said about the internet. This was well into when the internet was well on its way and obviously going to, quote, fundamentally transform the world economy. He said that the impact of the internet will be seen in retrospect as having no more of an impact than the fax machine. Then when Donald Trump was elected, he wrote an op-ed the next day and he said, well, I'm really sad to tell you here, but the stock market is going to fall as a result of this electoral win by Donald Trump, and I'm sorry to say it will never recover. Now, of course, it took about 8 hours for the stock market to recover once they absorbed the news that Donald Trump became president, and then the markets convinced themselves that Donald Trump was good for the stock market. And, well, that prediction turned out to be completely wrong. And now he's saying there's a possible U.S. recession with little Fed wiggle room. Now, there's nothing wrong with saying that. A lot of people have said that if there is a recession, obviously the Fed hasn't raised rates enough so that they can't lower rates. But he's leaving out the fact, the big favorite that I'm sure he's in favor of is the Fed can always do this QE stuff. He's the one who came up with this, we'll just print up we'll mint $1 trillion platinum coin. I'm not sure where he gets these ideas, but this one, he's basically saying that, maybe we'll do have a recession here. Economy will never recover unless we get some type of game-changing technology such as the fax machine. So he's predicting a recession, which maybe, if you're contrarian, say might not happen in the time period that he says it's going to happen. Obviously, predicting a recession right now, it's really not that hard because the economy has been, the way they measure it, in an expansionary mode for 9 years. And the reason it's been that way is because of accommodative monetary policy. And these things run in cycles. And given that the Fed has raised rates 7 or 8 times in the last 2 years, and there's a lag effect, one could expect there to be a recession in the next 6 months to a year. All right, let's move on to China. A few stories today about China. I want to focus first on this Kyle Bass article. Now, I've been talking about China for 3 or 4 years now, and it's not so much against China, it's against the perception that you get in the alternative financial media and in the gold and silver community that China is like your gold buddy, because China likes gold, and China is smart, and read Sun Tzu, and all this nonsense about how China is going to crush the dollar and end dollar hegemony. All these stories about China is smart because it has gold, China produces, United States doesn't, United States has so much debt. And a lot of these stories are so well ingrained in people who follow gold and silver because most of the gold and silver channels just repeat each other. And they've been going on and on about how the United States is just a bunch of debt and China is this monster producer. And what all the stories never ever mentioned is that China's producing, but they're producing because of the massive amounts of debt that they fuel these projects. And they go on about how China's got all this infrastructure, the United States just has debt, and China's going to get smart, and they're going to consume their own stuff, and they're not going to take little green pieces of paper anymore. And there's many half-truths in that, because when China borrows money to build all this infrastructure that it doesn't need, that means that those debts aren't going to get paid back, because if it didn't need the stuff that it built, the bridges, the thousands of skyscrapers, and remember, they're using steel, they're using copper, they're pouring cement. They're on a massive economic boom, which really was, in a sense, a very elaborate, when they say you dig ditches so that you can fill them back up, that's essentially what a lot of the Chinese economy was. And they know it's coming to an end because they borrowed a lot of money to build a lot of infrastructure that they didn't need, but yet it put people to work. It created economic activity. But now we're seeing that if they can't grow into it, and they won't, a lot of these buildings and bridges and rails that they don't use are actually not some type of asset. They're a massive liability because they're not revenue producing, but they still have to be maintained, and you still have to pay tax on them. And the banks that lent the money for these projects are not going to make their money back. So there's carrying costs. And what the Chinese government has been doing has been kicking the can down the road and telling the People's Bank of China, telling the state-owned banks, don't worry about it, just extend the loan, give them more money, forgive the loan, convert the loan to equity, extend the terms. And that you can only do for so long. And China realized this. I mean, there's central plans, and when you do central planning, you don't allow for the markets to correct because you've created such a distortion in doing what they've done, that they realized a couple of years ago, some of the People's Bank of China's governors were saying, we may have overdone it. This Minsky moment where we're really not going to get the bang for the yuan that we're getting from building this infrastructure. So we're going to try to stop. And they were on a plan a couple of years ago to deleverage, which meant stop doing this type of thing and trying to convert the economy into a service economy, export economy, but not to rely on construction to drive a lot of their GDP. The problem with construction is if it's not market driven, you're just building stuff, you might as well seriously be digging ditches and filling them back up. If you're not going to move people into high-rise apartments in the next 2 or 3 years, and maybe not ever, then you're really wasting your time on a very large scale, and you're borrowing a lot of money in order to do it. So China realized that, and they were at least giving lip service to the fact that they were going to try to deleverage. Now, they had massive amounts of debt. At the time they were talking about this, they had non-performing loans in many industries, 30 and 40%. Stuff that is just unbelievable. Now, the only reason they get away with, a lot of people say, well, they owe it to themselves. Well, debt is debt at some point. You just owe it to yourself. That's like the United States saying, don't worry about Social Security. Don't worry about Medicare obligations. We owe that money to ourselves. We'll figure out how to do it. If we have to borrow it from ourselves, we'll do that. So a lot of people in the alternative financial community have been very down on the United States for the right reasons economically, because there's a lot of debt and there's 21 at the time, 20, 21, $22 trillion deficits, unfunded liabilities, 100 and some odd million. And they created this whole narrative, though, that, well, not China, China is buying gold. They are smart. They know what's coming. They read Sun Tzu. All this fantasy stuff that just because China was adding gold to reserves and that China imports gold and produces gold, that somehow they're not a debt monster Ponzi scheme. And it's obvious that they are. And the fact that you have gold doesn't make you smart. The fact that you have gold doesn't absolve you of economic reality that you can't run your deficit up. I mean, you just can't print yuan into oblivion and hope the fact that you have gold is going to fix things. And a lot of this China is your gold buddy stuff, and you have to hate the U.S. started, around the time of QE. And there was some truth to it in the sense that the U.S. was doing QE, and the rest of the world was like, what is this? You're just printing money. But no one was noticing that China embarked at that time on massive QE itself, or massive government stimulus, and hasn't stopped. And what's happened recently with this trade war is China was never counting on, they're always counting on at least getting that revenue from the trade with the U.S., and now they're kind of hosed because, and we'll see what's happening with their steel industry. It's shrinking. They've had to reverse course on trying to deleverage. They said now that, well, we're going to have to do more infrastructure projects, as if they don't have enough infrastructure. So they said, well, the kind of infrastructure we're going to do is local, like parking lots. But again, those local and perhaps needed infrastructure projects are not of the same size or breadth of these. Let's build 80 skyscrapers in a place and create a new city. Let's build a few bridges, railways, and so on. So they really are having a trouble trying to figure out how they're going to keep their economy going. And having this happen, this trade war with the United States, came at the most inopportune time. And Kyle Bass, who's been a China bear probably as long as I have for the last 3 or 4 years, he's saying that, he just pointed this number out, China's total credit right now is $48 trillion. That's 3.7 times GDP. That's astonishing. I think 2 of that is external credit, $2 trillion in external debt. They've started borrowing in dollars externally as well. And the U.S. has that $24 trillion deficit, even though China's economy is 37% smaller. So China actually has more debt than the United States. Now, but they have gold. Well, I don't have the charts to show you today, but I did a couple of years ago. I showed where even if China, not the People's Bank of China, but the country of China, can take the 20,000 tons of gold that are in the country, round them up, put them into the central bank or some central repository owned by the government, that gold is only worth $890 billion, even to 20,000 tons. So they don't have that much in dollar value worth of gold. And they say, oh, well, they'll just revalue gold to $10,000. Not that simple, but even if they did do that, they're still only going to have a few $1 trillion worth of gold. So China's starting, the cracks are starting to show. A lot of this has not been, China's been actually fairly transparent about this. It's really been in the alternative financial media, people telling you that China's going to crush the dollar. And China has no, they convince you that that's what China's concern is, or goal in life is to acquire gold and crush the dollar. It's not. China's goal is to keep its people occupied, to keep them employed, and to keep Xi in power. Now, if crushing the dollar or end of dollar hegemony would do it, then that's what they would do. But that's not the easiest thing to do, and that's not what they're striving for. Remember, they borrow their entire economy. State-owned enterprises are run on dollars. They have $1.2 trillion worth of U.S. Treasuries. It was, oh, they'll just dump them. Yeah, okay, and then what happens? Dump treasuries. There's all these fantastical stories, and they're all geared towards making it look like China's in the driver's seat, when actually they're not. And then they make up these stories that they're with the BRICS, and the BRICS have had it. And the BRICS are Brazil, Russia, India, China, and South Africa. They're not really the fun bunch there. They're not all together. In fact, India and China have many major disputes. In fact, right now, India and China having a border dispute right here. China condemns India's Prime Minister Modi's visit to the Arunachal Pradesh area. They have border area disputes. But the BRICS, end of dollar hegemony, my Belt and Road, gold 50,000, appear to be against the Indians when you really aren't. Sun Tzu. China and India are not buddies. Russia and India are closer than they've probably ever been in their history. But historically, they're not buddies. Brazil is clearly now outside of the orbit of China. China's warning Bolsonaro, don't be tropical Trump. And that's what he is. He's a nationalist. He's not interested in forming this BRICS alliance. It's a Goldman Sachs named BRICS. And South Africa, I don't know what that has to do with China. So this idea that somehow this entity, the BRICS, are out to crush the dollar. No, they're out to work just like any other group where they have common ground, where they can work together. But they've pitched BRICS a lot in the alternative financial medias as if it's some type of anti-dollar group, that's the purpose of the BRICS, and it really isn't. And let's see what else is going on with India and China. I mean, they have disputes at the border over mineral rights, for water rights. Yeah, China and India are in the BRICS. They got one goal in mind: end dollar hegemony and cause gold to skyrocket. Sun Tzu. Yeah, it's too much with this stuff. But here's what's happening with, just a quick story here. The bond markets. 2 large Chinese borrowers missed bond payments. Oops. And again, what are they going to do? Just extend more credit, convert it to equity? Just because it's owed to yourself doesn't mean that it's not a disaster when you don't pay debt back. Whether you don't pay an international creditor or domestic creditor back, it doesn't mean... And by the way, it's actually better that the United States has lent money to countries overseas. They run their economies on dollars. They need the dollars. And what if the United States says, okay, we're not paying you back? That's probably worse than if the United States told American holders they weren't going to get paid back. So I'm not sure. I think debt is nasty no matter what if you have too much of it. And if you're using it as a tool to get rich, that's nuts. And that's exactly the reason that people who criticize the United States, rightfully, that the United States has become addicted to debt. And that's the whole dollar collapse and my gold and silver are going to go skyrocketing because of China. No, what people aren't realizing is that the entire world, pretty much, all of the major central banks are addicted to credit creation, whether it's the Swiss National Bank, the European Central Bank, the Bank of Japan, People's Bank of China. They're all like that, but the United States, even though it is also creating massive amounts of debt, actually has positive interest rates. ECB, Bank of England, Bank of Japan, they don't even have positive rates. They do barely. And in some instances, they have negative interest rates, and they're still doing stimulus and QE. Not that the United States is a paragon of financial prudence, but not only is it more prudent than these other central banks, including the People's Bank of China, Bank of Japan, European Central Bank, Bank of England, and so on, but it is the one currency that the world, most of the world, runs on. Now, of course, there's always countries that are against the dollar. They've been kicked. And most of those countries that are against the dollar is because they're under sanctions, like Iran, Russia. They're worried about their ability to access the SWIFT system and so on. But look what's happening in the steel industry to China. This was a story in the Seattle Times. Is an AP story, though. Chinese shrinking steel industry, but too slowly for West. Chinese steel mill, a target of President Donald Trump's ire, are the industry's 800-pound gorilla. They supply half the world steel and very cheaply, but they're in massive decline now because they realize they can't just keep building buildings that no one's going to move into, and now they're getting tariffs slapped on by the United States. And again, like I said, they've lost 1 million jobs in the last couple of months because of this. And then if you look at this story here, U.S. Steel opening up and restarting a new factory in Alabama, again as a result of the tariffs. Now, we're not going to debate or discuss the efficacies of tariffs in general. What we're talking about here, though, is how central planning, the Chinese economy that has done the central planning, didn't count on any of this happening. And now that there are tariffs, now that they've realized they have 2 issues right now. The tariffs are hurting their export of steel, and their inability to continue to borrow money to build stuff that they don't need is also hurting the steel industry. So China is actually in a pretty big world of hurt right now. And with the point of the Kyle Bass article, and I just mentioned the highlights and picked out what I wanted, was he was advising Trump. I don't know if he's an advisor. He's saying Trump shouldn't take the easy way out over China. He's saying that China's in a tough pinch. And time is something that China doesn't have, because the longer they wait, the more the economy deteriorates and the less revenue they get pouring in unless they can get these tariffs removed. They need to jumpstart and get back to where they are. The way they are trying to navigate through this is not only by borrowing more money and building more infrastructure, but is providing a lot of the state-owned enterprises with more subsidies, tax breaks. I mean, they really want to make sure that these companies can continue to employ the massive amounts of people. But obviously, if they don't have a market for their goods, or they can't borrow any more money, they're going to have troubles. And China's aware of that. That's why they have all of these social credit systems in place, these applications that can tell you whether you're a deadbeat on your credit, these apps that can tell you whether someone is jaywalking and what they look like and who their friends are. They have a tremendous censorship, and the reason for that is they know that if they can't keep the wheels on this economy, they're going to have much worse problems than they had in 1989 with Tiananmen Square, because they have moved, I think, 350 million people from out in the hinterlands of China into these brand new cities. And these cities are where they came to do work. And if there's no work for them and there's no food, China imports massive amounts of energy as well. So China is not this self-sufficient country. They import a lot of rice, a lot of soybeans. They're not self-sufficient. They have become comfortable with their position as a major exporter, running trade surpluses, building up dollars, and then being able to buy what they need in imports and still maintain that trade surplus. That was the model. That model's been turned on its head, and probably would have been turned on its head anyway as a result of just overdoing the credit. But now with this spat with the United States, and they're changing relationships with India and Brazil, I think they're in a bit of a bind. And ironically, what might make gold skyrocket would be a collapse of China more than China is buying gold. They know it is coming, and they are smart, and they are going to crush the dollar. And when the dollar collapses, I'm going to have my gold. I don't think that narrative is going to play out, but let's see what you guys think. And okay, let's see what you got over here. All right, I got nobody in the chat. Nothing. That doesn't make any sense. No one in the chat. That can't be. Oh, there they are. All right. Chat just turned up. All right. Pablo says he likes that catchy new intro. I'm going to play that intro again. I really do like the music that Mark Battaglia creates for this channel exceeds, I believe, the quality of the content. I mean, these are nice, short, 30-second tunes that he makes, and they get a little Smaulgld at the end. This one's really a nod to our friends in the United States who happen to live in places like Arkansas, Texas, Georgia. All right, let's play that again here. Very nice. All right. Well, we've got the crowd here. DW Pablo. Ann is here. Jeffrey is here. And Morning Mayan is here. Yes, we're all here. All right. Pablo Lewis, what about brick and mortar stores? Are there more accepting Bitcoin and Litecoin? Yeah, there's a lot of places you wouldn't know that accept Bitcoin and Litecoin. There's a lot of places online that accept Bitcoin and Litecoin. Most of your bullion dealers do accept Bitcoin and Litecoin. I've always been ambivalent about the acceptance of people using it, because in a sense, if you use it, you're selling it. And if you're selling it, then unless you're going to go out and replace it, then I'm not sure how that helps. Now, the reason I've been thinking it through, the reason it does help is if you do buy bits of Litecoin, let's say you just fill up your wallet $100 and then you spend it, you have to have some incentive to spend cryptocurrencies. In other words, if you can go into a store and spend $100, you have $100, or you have a debit card or credit card, why do you need Litecoin to spend $100 or whatever you're going to spend? Well, if the store is going to give you a discount online or in person because they don't have to pay the credit card fee, and I just found this out, even if you use your debit card, they still have to pay the same almost credit card fee from the processor. But if they're going to accept Bitcoin or Litecoin and maybe give you, well, then maybe it makes sense to load up your loaf wallet and buy $50. Not as an investment to hold, but just to have on the odd chance someone's going to accept it and you can use it. It's also good for micropayments if you want to send Smaulgld a tip. If you were to send a Smaulgld a tip through PayPal, like $2 or $3, if you send $3, I get like $2.45. So that's another advantage of having just a small amount of Litecoin. So in that sense, if people are using it a lot and they see that it's not like, well, I had 100 Litecoin and I spent it all, there's no plus side to that because then you're just selling it. But if you're buying 3 or 4 Litecoin at a clip and then selling and then buying more, then there starts to be a velocity of money. People start using it. Merchants start switching over and realizing that it's really just as easy to accept Bitcoin or Litecoin as it is to accept credit cards, and there's less fee. And then also, if you put one of those ATMs in your store, well, you're going to get that money back most likely. So you put the thing in the store, you make the fees off of the ATM machine, and then when the person wants to spend money, they want to buy a 6-pack of beer or whatever they're selling in the store, Smaulgld mugs maybe, I got to get some distribution going there. Then you spend the Bitcoin or Litecoin in the store and there's not as much of a fee when you spend it there than it would be if they had used their credit card. So I can see that that would be a way to build out usage, but also create some type of demand for it as well. Okay, Richard Bassiano, some of the millionaires my brother talks to down in Florida say gold and silver is real money. Actually, you know, that whole gold is money, silver is money, period, whether it's money or not is a semantic argument. It really is irrelevant as to value. Because what gives gold and silver money is not the currency part, is not the point that you can use it to trade. The only value in silver as a medium of exchange or gold as a medium of exchange is for insurance if you're unable to use digital payments, meaning the lights go out or there's a currency crisis. But that premium isn't that great. The real value in gold and silver isn't that they're money, period, is that they have unique properties and they are valuable for use in things other than using them as a currency. So when I say gold isn't money or silver isn't money, I don't mean gold and silver aren't valuable. It's the same as when I say horses are not transportation primarily. That doesn't mean horses aren't good, horses aren't valuable. It's just that there's better ways to get around today than riding around on a horse. Horses are valuable for other reasons today. Same with gold and silver. Gold and silver's value used to be the fact that you can make it into coins and people can spend it. It was divisible. It was durable. None of that matters anymore because people don't walk around with gold coins, silver coins, and no one accepts them. So there's no value there. That's why I say they're not money. I'm not saying it's not valuable. All right, morning man. I used to go to the Hollywood Bowl in the day, but people drank than bowled in the day, but more people drank than bowled. Yeah, okay. Jeffrey O. Ross says, copper, silver, and gold will get you lots of cashless energy coins. Hold them till then. Yes, if one of the reasons that you buy gold or silver is to have it in the case of emergency, in a sense, you're buying, there's an insurance premium for sure on gold and silver. I'd say even more so silver, because silver would be easier to transact in than gold. Watch the banks make Bitcoin and Litecoin or even their own energy coins on cards and say, drop you off metals here and wait you get a number of energy coins. Yeah, it could be. All right. Let's see. DW, at what point does strongly approve or disapprove kick in? 60% I agree, 70% approval. Don't know what that means. Seth Shepard is here. Hello, Seth. Miser is here. Yes, PMI down in China. All the Chinese data coming out of China is very bad right now. And the only way you can reheat a souffle in China is to just borrow more money. But that's what got you there in the first place. It's just like the drunkard who's got the massive hangover. And the only way he's going to feel better is by totally destroying himself by drinking another quart or two of whiskey. They can't really do that right now. All right. Yep, China's one big Ponzi program. All right. Yep, I will take US dollars over won. And so will the rest of the world. And again, this is the same thing when people insist about the gold-silver ratio being unsustainable. It's the same as China is going to crush the dollar. More and more people China is going to be an international reserve currency. Look at the last 5 years. The percentage of holdings of yuan by central banks has remained between 1.5% and 2%. There's no mad rush for any country to want to hold yuan in reserves. But the gold pumpers will tell you, oh, but they have gold back yuan, game over, game changer. All you have to do is look at the reality of the situation. What a lot of people do is they just listen to these channels, and the channels listen to each other, and they repeat all this stuff. Interesting. Unscamable says, anyone else notice that the higher a country's debt, the higher their stock index is? It's somewhat true. Well, look at this one. Look at the Russian central bank. Very little debt. 20% of their reserves in gold. $500 billion worth of reserve. And their currency is doing horrible. And so why? Well, they're not allowed in international trade. But still, there's nothing unsound about the Russian central bank's management of its reserve position, its interest rates, and so on. I mean, it's not a basket case, and yet you would think, because its currency is, that the Russian economy is in tatters. All right. Yeah, DW, I believe Russia has low debt, but what do I know? It's true. They do. They don't have a lot of debt. And the reason the Russian economy and the Russian ruble does poorly is because it's somewhat of an international pariah. All right. What else do we got here? Miser says, Russia and India are more nationalist than the U.S. You know what made me realize that about India with this nationalism is when Modi demonetized the rupee and said, okay, you got to turn that rupee in or they're not worth anything. And then they didn't have enough rupee to turn them in and convert them. They said, well, we'll have to give you a bank account and we won't give you the cash, but we'll give you a card and the money's there in the bank for you. And a lot of people got financially harmed by that because they couldn't get to the bank. There were long lines. People supposedly died waiting in the heat. And I just would have thought that would have infuriated people. And I made a couple of comments during the time mentioning how I felt badly for the Indians that were going through this. And I had a couple of Indians come on and just tell me, you don't know what you're talking about. This is for the benefit of the country. We're trying to get rid of it. I was like, okay. Sorry for feeling bad about it. But I didn't realize that it wasn't as big of an outrage in India as I mean, I didn't take a poll, but I did hear a lot of anecdotes that they were suffering, but it was almost like it was for the good of the country. I don't think you can get away with that in the United States, just telling people, if Donald Trump went on TV tomorrow night and said, the money that's in your wallet right now, no matter who you are, where you are, if you don't turn it in by Wednesday, it's not worth anything. I think people would lose their minds. They wouldn't put up with that. I don't care if he said it was for the benefit of the country. I just don't think that you can get away with it. And Modi got away with it. He's still in power. There's no calls for him to be gone. All right. Lights going out in currency. Yeah. Okay, DW. My question earlier was about your story on polls. If you strongly agree, remember we were talking about strongly approve and strongly disapprove, and that was about an individual, okay? What level do you think it reaches? I agree with some point. Where do you see strongly agree kicks in? I think maybe I didn't explain it right. The way the Rasmussen poll works is they put out a headline number, like today, and it said, do you approve or disapprove of Donald Trump's performance? Okay? And 52% said yes. But of those 52% that said yes, 39% of the overall number said I strongly approve of Donald Trump, and 13% said I somewhat approve. So you take the 39 and the 13%, the 39 strongly approve, and the 13 that somewhat approve, and you get 52% approval. But really what you have is close to 40% really liking the president. And it's the same with the dislikes. And I think that tells you the strength of the candidates or the person's support and also opposition. So if it was just 52 to 47, but let's say strongly approve was 25% and strongly disapprove was 25% and somewhat approve was 25% and somewhat disapprove was 25%, that would mean that the person was 50-50 and pretty much only a quarter of the people really hate the guy and only a quarter of the people really like the guy. And the other people can go either way. They're like, yeah, I somewhat disapprove or I somewhat approve. I don't know if that answers your question, but I'm trying to make it clear what the Rasmussen poll, the advantage I see to it, not the results of it, but how they take it. I think that's a very nice way of gauging support, because somewhat approve, you can easily flip that person. Yeah, I somewhat disapprove. Well, you can go talk to him and make him approve somewhat. But when someone strongly disapproves or strongly approves, that's a solidification or a calcification of a position. If you strongly disapprove Trump, and let's say it's 48%, and only 2% somewhat disapprove, well, that means half the people are really against them. And it's going to be hard to flip that number. But if it's 25% strongly disapprove and 25% somewhat disapprove, then he's in much better shape, even though the numbers are the same, 50%. All right. Since when are polls reliable, asked Rob B. No, they're not. But the only thing I think about a poll that's a daily poll is, let's say that the Rasmussen poll is skewed towards Republicans. Okay, grant that. Or it's skewed towards whatever it is, whatever its skewing is. If you have a poll that is consistent with itself, you can still track direction. So let's say it's always skewed towards Republicans, or it's always skewed towards Trump, but it shows a movement from the strongly approve, those numbers get higher, and the strongly disapprove get lower, and the overall numbers change. It doesn't mean that nationally Trump is approved 52 to 47 or whatever it was today. What it means, though, is it used to be 47. It used to be like 52-47 the other way. So it just means that the poll is consistent within itself, and it shows a direction in Trump's favor. It doesn't mean that the poll is accurate at 52%, because they use likely voters. Who knows what a likely voter is? Registered voters. So it's not so much a that you can say it's accurate, but it can show, as long as they use the same polling methodology, it can show a trend within its own bias. All right, I think that's about it for tonight. I want to thank everyone for joining me. Don't forget to get your Smaulgld mugs, Smaulgld Game Changer mug. Oh, by the way, I also had some comments today. I just want to run these through you. People who don't understand this channel think that I have to tell them something good about gold or silver. Otherwise, I'm not doing a good service. They think that I hate silver, and they're like, please, don't you have to disavow. You have to tell me you don't dislike silver, that you don't hate silver. No, I don't have to say anything. I don't have to tell you it's good or bad. I mean, those of you listening probably know this, is that what I do is I present information, and I try not to give it the negative spin. I try to give it the realistic spin as to what it means. So the whole central banks are buying gold. There were a couple of people who were upset that when they got there, that it's not all I needed to know. There's more to the story, and that maybe these numbers of the amounts of gold that they're buying are not that significant, and they don't mean gold is set to skyrocket. But that's what they were looking for. They were looking for that story. They were looking to see, yes, central banks are buying gold. That means it's a game changer, and they wanted to hear 40 minutes of why central banks are smart. They know what's coming. They're buying up all the gold. Why isn't the price rising? And I think I explained, I tried to show how much gold they were buying, which banks were buying the bulk of the gold, where they were getting it from, their own mines, and that the bulk of it was coming from Russia and Kazakhstan. And it wasn't necessarily this massive trend where central banks were gobbling up gold hand over fist, and it's only a matter of time till gold is set to skyrocket. I don't think that's negative. That's exactly what's happening. What's negative, I think, and I think is wrong, is the pumpers trying to make such hay out of that fact without really explaining how much is being sold, how much is being bought, comparative to what other gold is being bought, what other gold is being forged into jewelry. So anyway, I know that the people who are listening this far into it know all this, but maybe sometimes you guys can go into the comments and read these things so I don't have to respond to them and explain to them what the purpose of the channel is. The purpose of the channel is not meant to be a cheerleading exercise for gold, silver, cryptocurrencies, or economics. It's meant to be analysis. And if you don't like analysis and you want to hear cheerleading, as you know, there's dozens of other channels that'll give you that type of analysis. So I hope those people do enjoy the type of analysis I provide, and we will see you again tomorrow. Oh, tonight there's going to be, I mentioned this, Beto O'Rourke and Donald Trump speaking, so I'm going to catch those later tonight, and then maybe we'll talk about it. Maybe we won't. Have a good night.